Welcome to my channel. Today I want to talk about investing in quality companies. Now each investor measures quality differently and has a different list of things they look at before investing into a company. Today I want to share with you how I deem a company is of quality, and I get there by utilizing a list, which you will get to see here in a minute. Let's first look at my portfolio performance. This is something I share with every single video. That's my promise to you. This channel is about growing, it's about becoming wealthy and learning. So if you like that type of transparency, this type of content, be sure to subscribe. We'll see here, I'm in the red, just shy of 1%. That's $450 of unrealized losses. Now over the next couple weeks, we have a lot of companies reporting earnings, so I will be sure to updating you, especially on the companies I hold. Now before I show you this list, I think creating a list like the one I'm going to show you helps you take the emotions out of investing. You do not want to get emotional when investing because something can hit the news, the headlines, and you see people selling, you get fearful, and you end up selling your own investment, but you later look back and it is actually a buying opportunity instead of a selling one. And that's just something that happens, I see, with a lot of investors, so you have to take your emotions out of it. And today I'm going to be comparing two companies, Microsoft and Tattooed Chef. Of course, Microsoft will rank high on my checklist and Tattooed Chef low. And speaking of emotions, with Tattooed Chef, I hear a lot of people say, but I really like plant-based food diets and want to support a company like this. Well, that's fine, then go buy its products. But as an investment, you have to remember you are buying a company, not just a food bowl you're going to eat at lunch. So you need to make good investing decisions, and I think utilizing a checklist will help you stick to the fundamentals that you need to be looking at before you put your hard-earned money into a company, because you want that money to grow long-term and you want to become wealthy. So let's get right into this checklist. The first thing on my checklist is I look to see if a company has solid financials. Now I look at the balance sheet. I want to see if it has a low liability to asset ratio. Amongst other things, I look at the income statement. Are their expenses decreasing? Is their revenue increasing? If not, why? Also, their cash flows, are they growing? If not, are they utilizing that cash towards something that I think will create good returns in the future? So I look at the different return ratios as well as the profit margins, the different margins that a company can be measured on. And all these things help me decide if this company has good financials or not. So let's look at Microsoft first. We'll see here their balance sheet, they have a low liability to assets percentage of 51.8%. And I believe their debt to assets is about 22%. So they are low leverage. That is fantastic. Their income, they have a profit margin of 74.74%. So they are making great money off the products they're selling. They get to keep more of it. That's fantastic. They have positive cash flows. If we look at their returns, all these ratios are above the industry average, which is there on the right. This company has great returns as well as profit margins. You'll see here the lion's share is well above the industry average, and these are the things that create a solid financial company. Now, if we look at Tattooed Chef, the very opposite, we will see a low liability to assets ratio, but this is all as of September 30th, because remember, a lot of these companies will be reporting over the next couple weeks, including Microsoft and Tattooed Chef, and as of their last earnings, they did announce that they will be having to take out a lot of debt to finance this company. So I expect this number to go up massively. You'll see here their profit margin is negative. That's not good. They're making zero money. They're losing money on the products they're selling, and their cash flows are negative. You'll see here their profit margins all are basically negative except for one, which is at a very small 2%. This is awful. Their returns are all in the negative. This is awful. So what I show with most of my videos is this metrics chart that I created. This one is for Microsoft, just to show you, I deem these some of the most important metrics to look at before investing in a company based on its financials. And I like to do things such as, for example, the PE ratio. I compare the trailing 12 months to the last 5-year average, and these things really help paint a picture. I put the earnings per share, the revenue, the cash flow, the dividend information, the debt to assets, the market cap, and if they're reducing or increasing their shares outstanding. These are all things I look at to help determine, is this company, does it have good financials? If yes, that's a big check mark. So the next thing I look at is, does this company have a good management team? So I want to start with Microsoft. I might mispronounce this name, but Satya Nadella, he's the CEO of Microsoft, and he is an excellent leader. In fact, Bill Gates has provided some words of praise for Nadella. He said, quote, We needed a high level of investment in cloud that was quite daunting. But Nadella has delivered and has turned it into an extraordinary asset. It's comforting to me that Microsoft is in such great hands. This says a lot about Nadella. Not only that, if we look more into the meat of his history and what he's done for this company, Microsoft's large footprint within the enterprise software space has its vast, flourishing product portfolio, which includes applications, platforms, and infrastructure, and extends across Office, Azure, GitHub, Teams, the gaming metaverse section, and other growth business lines, which makes it truly unmatched amongst its technology peers. Microsoft now boasts a 60+ billion commercial cloud business, which includes offerings such as Azure, Office 365, Dynamics, and LinkedIn. Office 365 has a user base of 300 million users. Revenues from Azure grew 42% year over year, and the commercial cloud business grew over 20% year over year. This is possible not only because Nadella has constantly reinvested back into the business, committing $25 billion annually into R&D, but also because he has strategically added nearly 50 companies to Microsoft. Bet you didn't know that. Now, through these transactions, these acquisitions, he did these heavy in the healthcare sector, the manufacturing and education, such as its $20 billion acquisition of Nuance in March of 2022. All these things, when you start looking into it, you start learning about the leadership, the CEO, and it's fantastic. Furthermore, Microsoft has struck partnerships with competing and adjacent vendors such as IBM and Oracle to further Microsoft's role as a holistic strategic partner across technology challenges rather than a simple software vendor. He's also done it with Meta, partnering up in the metaverse. So this says a lot what I'm about to say. IBM's CEO has quoted himself as saying, "I am a great admirer of Nadella. I've learned a lot watching him bridge the world of business and technology. He has focused on building new partnerships and expanding Microsoft's ecosystem. A big lesson he has taught all of us is cooperation can be much more powerful than head-to-head competition. Partnering with potential competitors grows the pie for everyone. I am proud IBM is a partner with Microsoft." That says a lot, that your competitor, your rival, is speaking highly of you and your business. Now, since Nadella took over in 2014, Microsoft stock became one of the best performing stocks in the index, up 1,000%. This is just touching a little bit of Nadella and what he has done with his management team, and that is an example of a good leader, a good management team. Now, the very opposite, in my opinion, is Tattooed Chefs. You'll see here, this shows the leadership team. Now, I circled the Chief Operating Officer, Stephanie, because she left late last year. It didn't say why, so when they don't really report and say why someone leaves or really go into detail, usually I don't think that's a positive thing, so she probably left negatively and they had to hire someone else. But Sam is the CEO and president, and Sarah, she is the chef. She creates the dishes. And the one thing I don't like about this management team is they've had a few missteps. One of their earnings last year, literally the day of, within an hour, I believe, before they were supposed to report earnings, they canceled earnings because their financials were not ready. That is awful. That is something that it's just alarming to me. It raises a red flag. Not only that, this company has a lawsuit against it now claiming misstated financial statements, which is also not good. Plus, we just looked at their financials. The management team is responsible for their performance, and it's been horrendous so far. So this company does not have a good leadership team, in my opinion, and that's just an example between Microsoft and Tattooed Chef when it comes to this checklist, which one has a good management team and which one doesn't, as an example. Now, the next thing I like to look at, does this company have brand recognition that I'm going to be investing in? Does it have staying power or growth? So when a brand is very recognizable, it creates a lot more conversation out there. And of course, if it's a good product or service, people will talk and recommend it, and that creates that growth. So I like to see that brand recognition, and it doesn't mean it has to have world recognition like Apple. It could be in its sector, right? It could be in a niche, and that is fine too. So I think that's very important. Also, I like to look at products and services. What does this company do? A lot of people don't really look into this, and that's not a good thing. You have to know what the company does that you're invested in. So a few things I like to look at. Do these products and services create repeat customers? Are the customers happy with these products and services, and do they keep buying, right? Also, does this company possibly have a sticky subscription service? Subscriptions are great because it's that constant revenue, it's dependable, and you can increase prices much easier where your customers don't really pay attention. Also, is there a customer dependency on your product? So let's look at Microsoft. It has a stronghold in the corporate world, and yes, companies are dependent on like Office 365, for example, or now Azure Cloud product. So yes, we're Tattooed Chef. No, customers are not dependent on it. In fact, there's so many options in the frozen aisle. There's no customer dependency, and it can hurt the repeat customer base because people like to try different things when it comes to food. Also, does this company have a big and healthy ecosystem? I like to use Apple here as an example. You have the iPhone. Does that product lead you to buy other products and services? Yes. You're more likely to buy the Apple Watch, the headphones, maybe Apple Music, so on and so forth. That's a healthy ecosystem. So between Microsoft and Tattooed Chef, obviously Microsoft ranks high here where Tattooed Chef doesn't. The next thing I look at on my list to deem if a company is of quality, does it have a healthy and big moat? So what I like to look at, does it have a competitive advantage? Microsoft does. Obviously, they have the lion's share stronghold of the corporate world when it comes to its Office 365. It has Cloud Azure, which is second to Amazon's, which I recognize, but it is still growing healthy. And I believe the fact that it's in the top 2 is great because this next point you see here, monopoly, I like to invest in companies that are more of a monopoly or duopoly because that shows to me they're doing something right. They're at the top for a reason, and that creates a lot of strength. Also, is the company hard to disrupt or replicate? A lot of people were investing in Zoom. Zoom to me is easy to disrupt, it's easy to replicate. Other companies do it. Same with Teladoc. A lot of medical businesses use their own internal systems. They're easily replicated. So for Microsoft, you definitely bet they're hard to disrupt and they're not easily replicated. I couldn't start a Microsoft business, but I could possibly start a frozen food business, right? I can grow my food, I could freeze it, I can even go to a local farmer's market and start selling it and start that way. It's a lot easier for me to get in there and try to disrupt Tattooed Chef than it is Microsoft. So the moat is something I look at. I think that's a protection of your investment, and that's just something I like to see. Now, the last thing on my checklist is it at a good valuation, and the way I deem this. So basically, buying in at a good valuation, you want to buy when it's undervalued as opposed to overvalued because you can pay too much for assets, for investments. So I like to look at its financials, and is it sitting historically below a lot of those metrics? So as I showed you my metrics, there was the PE ratio, the trailing 12 months versus the 5 years. If it's now sitting below that, that's a good thing if it meets all the other areas of this checklist. So I go through, if it's sitting below its average on many of the metrics, plus it checks and ranks high on all the other things we've mentioned on this checklist, I deem that as undervalued, as opposed to overvalued, where maybe it's trading historically above its financial averages, its different ratios and metrics, and it really doesn't rank high on the checklist. It's overvalued in my opinion. So this is how I find quality companies to invest in, and you can feel free to utilize this list in making your own list, but I really want to say you should make your own list. Don't just copy and paste, but you can utilize this because every investor is different and they value different things. And I just want to make a point here too. This to me is just not a checklist, but it's a rating system. So I might say, with the good management team, Microsoft is a 9 out of 10, where Tattooed Chef is a 1 out of 10. So I also like to do that. So anything like an 8 and above, I think that is something that with a company that I want to keep, it checks off that item for me. Anything like a 7 and below, it really has to rank exceptionally high in other areas to kind of offset that. So really, this is how I find quality companies. And let me know if you would add or take off anything on this list. Do you think my list is a great way to find quality investments? I'd really like to hear your feedback. And again, I think sticking to something like this helps you take your emotions out of investing because that's never a good thing. It causes you to do impulsive buys or impulsive sells, and it just always leads to losses. This, I believe, leads to profits and long-term wealth. So I really appreciate you guys tuning in today. Again, I'd love to hear your feedback. I hope this video has helped put things in perspective. So when you go out there and invest and try to find companies, you can find quality companies based on the list that you make. And again, feel free to utilize my list. I have no problem with that. And thank you. I hope you guys have a great day. We'll see you very soon on Mark Arnold's Finance.